about the
you give me a chance to actually get
inflation in Europe.
In the economy of the euro is very different from what is happening in the economy of the United States.
So I can listen in for a little bit. So good morning, Michael, Chad, Bob, how are you? Present is good. Let's see. Earnings. I guess we have to watch the dollar. And yeah, all right, let's start. Welcome to Tradespoon and Yellowtown. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a live trading room open to trade stock and option using our technologies. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. You can see my experience here. Disclosures are very important. Please read them. You can always pause the screen if you need more time. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA, nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education for research purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. In terms of trading plan, very important before market opens, review your trading plan. One is portfolio allocation. I propose 30% of your portfolio to be in cash. You can adjust the cash. If you think market is overbought, that number can go up. If you think market is oversold, that number can go down. But on average, 30% in cash. Similar approach to portfolio drawdown. On average, I don't think you should have more than 4 positions with maximum loss of 2.5% of account value per position. If you think market is extremely oversold, maybe you can have 5 positions. If it's extremely overbought, maybe you have 2 positions. But the idea is not to risk more than 10% of your account value. So market can go up 20%, market can go down 20%, but you know that you're limiting your exposure to 10%. Trading journal is important. I encourage everybody to keep a journal where you would write down what is driving the market, right? A lot of it is today's ECB decision will drive interest rates, right? Euro is down, actually. Euro is down 0.5% as we speak. So ECB decision, Fed decision on interest rates, any information on the inflationary data, CPI, PPI, PCE, retail numbers, today retail numbers, the PCE data. So I would document those news and how they drive the expectation of the inflation, whether this is soft landing or not a soft landing. And how it affects your portfolio. How do different, out of those 4 positions, are you diversified? They're all moving in the same direction, or do they complement? Are they diversified where they don't move the same way to interest rate decisions or to dollar euro relationship? And then I would document checklists. Before you enter the trade, have a checklist. Where before you enter any given trade, I would document, make sure you don't make the same mistakes as we all make, right? The most common mistakes are number of positions. You have 20 positions, 10 positions, right? I think that's just too many. Second one, well, again, for an average retail investor, if you're managing $1 million and you've been doing it for 25 years, I mean, you can have 10 positions, I don't know, 20 positions. But if that's not the case, then on average 4 positions should be sufficient on average. Position size. I don't think it doesn't matter if you're managing $1,000 or $1 million. It should not be more than 2.5%. Larger portfolio, maybe it's less. Maybe instead of 2.5%, it's only 1.5% because you have 10 positions. If it's a smaller account, you're managing $1,000, maybe it's 3%. But that should be the goal, right? If you're doing day trading, you should not risk more than 0.5% or 1% of your account value per trade if you're an active day trader. 0.5% or 1% of
again,
your account value
how
per
your positions
trade if you're an active day
correlated
trader.
to the move in euro dollar, or when the dollar moves, how all of your
4%
positions
or 1% of
how are
your
your
account value
how
per
your positions
trade if you're an active day
correlated
trader.
to the move in euro
Steepening or yield flattening, that will affect your positions as well. And if you see all of your positions move the same way, then maybe consider either changing them or diversifying. And then being emotionally intelligent, right? Trading psychology is extremely important. This is a trader's market. In trader's market, it's all about technical analysis and it's all about emotional intelligence. Fundamental analysis is great when you have you're a long-term investor and you're a value investor. Yes, makes sense. If you're holding position for the next 3 to 5 years, you want to invest high, value, high cash flow companies. Makes complete sense. If you're investing for the next couple months, next couple weeks, I'm not sure valuations or earnings will matter that much. So something to keep in mind. So very important to be emotionally intelligent, self-aware, go through different exercises, meditation, praying, labeling exercises, breathing exercises, something where you are basically analyzing your thoughts and having a healthy discussion. I encourage you to do it in the form of trading journal. Healthy discussion with yourself. Write pros, write cons for all your decision. Ask yourself why multiple times. Do kind of these deep drilling exercises. Observe your thoughts and try to find red flags. So it starts with emotional intelligence. I would take a deep breath in. Close your eyes, scan your body, and just find one word that describes how you feel. I'm gonna put down excited. I encourage you to do one word that describes how you feel as well. I do have to leave early today, so by 8:50, the next half an hour, I'm gonna have to leave. So if you guys have any questions, can you please type them now? So I'll make sure before I leave we review them. So, and again, if you're observing Good Friday, Passover, Good Easter, happy holidays to everybody who are observing these holidays. May there always be peace in the world and respect of each other and health. So happy and healthy holidays. In terms of, if I forget before we leave, so just happy holidays. It's a great time of the year, and hopefully there will be peace and health to everybody. In terms of market 443 overhead resistance, 430 support, negative trend. Model still sees negative trend. This is kind of a neutral price section, right? We traded lower, we traded higher. I think today is an important day to see where we're going to close, right? Right now we are in this downtrend spiders since end of March, right? So it's important for the bulls to take out this level, right? I would say 445 to close above 445. That would be a win. So if we close today above this trend line, that would be a win for the bulls, especially going in the long-term weekend. If we close below 437, I would say below 435, that would be a win for the bears. I'm still, so it's too early to decide whether this is the low or not, right? We're not out of the woods yet. I'm bullish. I think their, earnings season started, even though banks are not reacting well to the earnings announcements, neither the semiconductors, which is a little bit concerning. But I'm still optimistic. I think based on seasonality and a lot of cash on the sidelines, I think this trend line will be broken, and end of next week will be probably get close to 460 in the next couple of weeks. End of next week and week after, depending on the earnings season. But the focus will shift away from the inflation. You can see even PPI was worse than expected in market rally. So it seems like focus is shifting to earnings. And hopefully they will be better than expected, or at least in line. So that's my view on the market. I would watch this trend line. We need to close this gap and close above the trend line, 445, 447. If we are able to close above 445, 447, whether it's today, tomorrow's day off, or Monday or Tuesday, then I think bulls will be in control. As long as we're below this trend line, bears are in control. We do have a strong support around March, end of February high, January, February 14th low, February high, February, March 2nd. So this is a strong line, also 50% retracement. And, for now, bulls are able to hold on to the 50% retracement. Spiders is flat. Going into the pre-market, QQQ is flat. Lagarde is speaking to Lisa Abramovich. Treasuries fluctuate after ECB decision. Let's see. So I would watch treasuries. Again, yield is down. That's positive. Slightly higher now. 2-year yield is higher after the ECB decision. Dollar is also rebounding. So that's bearish for the market for now. That's about it. Let me know if you guys have any questions. Raymond, good morning. Bob, present. Claude, good morning. Calm, inquisitive, cautious, optimistic. Good morning, Marvin. Good morning, Albert. All right, so market is about to open. Again, for those of you who are joining now, please enter any questions you might have, since I do have to leave in the next 20 minutes. I did make some adjustments. Let's talk about some adjustments I did yesterday. For those of you who don't have Elite subscription, close 330 put, my opinion is that we're not going to reach 330. I mean, obviously, market can always overshoot, right? So, and retest the lows. It's sitting at this key support, 338. But 330 put, that's cost us $6. So basically, it has, in order for it to start making money, we have to revisit the lows. I don't think we will. Obviously, market undershoot, and even if we do, I think it'll be temporary, and market will have a rebound. So for that reason, I closed the 330 put because it's straight. This is a time decay, right? We have April expiration. Don't forget today, April contracts expire. So now we're in May. So there will be very fast time decay, right? Last month, there is always the rate of change of theta is very large. And for out of the money puts and calls, there is a big time decay. So for that reason, I'm closing 330 put, but I still have 350 put, right? I still think, my idea that we'll, by end of May, will be above 350 level. So, but I do have to hedge in case, trade goes against me. So I'm rolling again into September. So basically, I don't have a vertical spread, credit put spread. Now it's diagonal, where I'm expressing, bearish view into September and bullish view into the May. Also sold TSM spread, right? This is the earnings strategy. The 126 put got filled for 40 cents. So I exit the 126 put. Banks are under pressure. TSM, I sold the put spread again. The idea is collecting the premium from the earnings power trader, right? If you follow earnings power trader, then that's the trade, credit put spread. So this is a credit earnings power trader, Alaskan Airlines, again, trading around position. Airlines continue to trade higher, got filled at 57.30. Again, still have the position, but looks like airlines continue to go higher. Optimistic. Thank you for sharing, Teresa. Thank you. Again, if you're joining now, please make sure you enter any questions you might have. I do have to leave in the next 20 minutes, so I do have to leave early. Let's see. We do have ECB decision. Looks like in terms of interest rates, US higher, I assume European lower, and dollar is higher. So short term it's bearish, but we do have a pretty sharp pullback yesterday in dollar. It's rebounding, so it's not making new highs. That's positive. Technology flat, spider slightly higher, and focus is shifting into earnings. Let's see. Oil pullback, strong rebound from the recent lows, right, in the crude oil, back to above 100 level. That's another notable development. Let's see if anything stands out today. Nothing stands out. Market just kind of, people don't want to take large positions going into the long weekend. So it makes sense. So TSM after earnings, Delta Airlines continue to go higher. So airlines continue to rally close to recent February highs. For Delta Airline after the earnings announcement, BlackRock Group under pressure. Semiconductors giving up some of its gain, but still, this is probably one of the most bearish developments you can find in the market, that semiconductors are sitting on recent lows. They're retesting the lows, which is bearish for the market short term. United National Health Group slightly higher. Healthcare again continue to trade higher. This is safety asset classes. Healthcare. Goldman Sachs up 2.5%. So Goldman Sachs had slightly better than expected earnings. Morgan Stanley slightly worse. Wells Fargo retesting its lows, right? Following kind of JP Morgan earnings. Banks are under pressure in terms of, consumer loans are down. Some of the write-offs due to, Russia is a problem. Citigroup is actually up 2%, surprisingly. And then regional banks, PNC, down 0.5%. But again, they're sitting at this recent lows, which is concerning for both banks and semiconductors. All right. So these are the earnings. They're a little bit underwhelming so far, except the airlines. All right, let me know if you have any questions. All right, let's review the rest of the positions. Hello, Salmon. Nice weather in Peloton. Yes, a little bit chilly, but nonetheless nice and warm. All right, so let's review Apple. So Apple flat. It did pull back to, again, this March 3rd, that first reactionary high from the sell-off. So this is a good support, right? 166, I would say, is a good support. For now, it's flat after yesterday's rally. No changes. I have 160, 165 call spread. It's in the money. It expires in June, so I have time. I closed the put spread, so for now, I just have a bullish position, 160, 165 spread. Trim Alaskan Airline, as it rallied, kind of faces this overhead resistance, so I trimmed the position again. I have an order to buy it back if it does pull back to these 53 levels. So for now, I'm trading around the stock position, still long Alaskan Airline. Caterpillar looks like also rally together. Industrials are outperforming. Probably trying to retest the recent highs. I have 210, 220 call spread. For now, no changes. Trying to trim. Let's see. Caterpillar. So I have an open order to close at 630 and 720. I bought it at 580, 620. So 630 is probably coming close. So 630 I should get filled, be able to capture 10% here. Maybe even. Yeah, so that's Caterpillar. So still bullish Caterpillar. Marathon Oil. This is a new premium service. Option spreads at 52-week high. It's overbought. I do have July call spread, so for now I just have to wait. It's 22-27 call spread expires in July, so it's in the money. So just waiting for the time decay. Microsoft, similar to Apple, rebounded yesterday, slightly down. QQQ is down 30 basis points. So no changes to Microsoft. We talked about QQQ. I rolled the spread, right? I rolled the 330 long put into September. Was the idea that this level will hold. So I still have a credit put spread. I have 350 put that expires in May, and then I have September 300 long calls that expires in September. And then I still have 410 call that expires in September. Trimmed the silver position yesterday. So trimmed the silver position. Still long silver. I would be a buyer to pull back. Maybe a little, if it drops a little bit more. But I did trim. Right now I have 25-30 call spread. Still have 25-30 call spread. That expires in May, and then in June I have 20-25 call spread. That's in the money. That expires in June. TSM, we talked about this. I can go put an order to close the position for 2 cents. Expired today. So TSM rallied. We talked about Caterpillar, XLI. So Caterpillar also closed the gap, trying to trade around above this level. Industrials are outperforming, and then oil. Still have a small position in oil. It's a little bit overbought. I would be a buyer into pullbacks. All right. Any questions? The most important development right now is euro, right? I mean, it's ECB decision. Let's see and wait. But this is, it's sitting in this multi-year support, right? Going back to 2017, going back to 2015. So it's an extreme level, extreme long support. It's in downtrend. Short term it's bearish. If euro breaks down below this level, it will pull back the equity markets. So we have to keep an eye on this. It's going to be volatile because of the ECB decision, but that's the main development. Dollar is up, continue to go higher, up 60 basis points. Basically, on its way to retest the extremes during the pandemic, during 2017, 16. The European downgrade of European, Portugal, Greece, and Europe. I forgot what it's called. But default, right? European default of Italy and Greece. So it's reaching extreme levels, which is also concerning. What else is interesting? Semiconductors are down. Again, sitting on the key support level, also very concerning. If it doesn't hold this level, next level is 220. So it's about 5% drop in semiconductors, and then that can pull the market down. So we'll see. Delta. So airlines continue to trade higher. UNH is up 2%, Goldman up 2%, and then Wells Fargo is down 6%. All right, any questions? Where to hold cash for next 3 to 4 months? I mean, personally, myself in 401k, I have both. I have TLT and VTV for the next 3. The problem with TLT, 3 months might not, the treasury is oversold, and I think it's a good place to hold it, right? It's overdone, but it's continued to trade lower, right? Despite, being extremely. So 3 months just might not be enough, right? Treasury trade is longer term, right? If you believe that we're not going to make new all-time highs, right? Then I think Treasury, at some point, Treasury will be back to 148, 150, but it might take more than 3 months, right? It will correspond to market sell-off, right? At some point, when semiconductors break the support line and banks and home builders going to break those multi-month support levels, which we're sitting on them right now, I just don't think it's going to happen now. I think it's going to happen, well, I don't know, June, July. At that point, Treasury is going to rally, right? Because where are you going to hide the money? Right now, people are still under impression that we're going to make all-time highs, right? There's still this hope this is a soft landing, right? So if you believe this is soft landing, then Treasury might not be the right place. If you don't believe Treasury is you're in soft landing, I think, I think Treasury is the right place. So for next 3-4 months, probably VTV. Right? VTV, the trend is not broken; it's at all-time high. You can sell put spread, or buy stock. Collect 2% interest rate. So I think VTV for next 3 months is probably a better trade. Any questions? Right, it's 8:47. I'm going to stick around for another 3 days. Again, if you observe Good Friday, if you're celebrating Passover tomorrow, happy Passover, Good Friday, happy Easter, and, maybe you all live in peace and health, and best wishes. I'm going to stick around for another couple minutes if you guys have any questions. Otherwise, there's no market is closed tomorrow. So it is April expiration. I don't have any April positions, but if you do, one thing to consider, not to get a sign, right? If you do have a short position, if you did credit put spread in TSM and it's in the money, you want to be careful and just close these trades. William, Wells Fargo. Banks are sitting at this multi-month support, right? And they're breaking down, and their earnings are underwhelming. So this is a bear argument. Maybe the sell-off is going to start now as opposed to, end of May or end of June. So we just have to wait and see. For now, we have mixed. Goldman Sachs is doing well. Morgan Stanley doing well. So it looks like at least investment banking are outperforming large bank, right? So BlackRock Group, Goldman Sachs, and are doing better. JP Morgan, Wells Fargo, I would stay away. Phil, thank you. Best wishes. Happy holidays. Michael, happy holidays. All right, guys. Happy holidays. Let's look at the closing today. I think it's important. We have expiration, April expiration, long weekend. Again, if we close above 437, I think it's going to be a win for the bulls. It'll be like neutral, right? Neutral reaction. If we can close above this trend line, that would be very bullish. If we close below 435 would be very bearish. I think people don't want to take large positions going into the long weekend, but Monday and Tuesday, I think it's, I'm still under opinion that this trend line is just a matter of time to break through this trend line. Maybe not today, but maybe Monday or Tuesday, right? But on the other hand, the bears have a strong argument, right? Keep an eye on semiconductors, right? They're sitting on support lines. Keep an eye on Microsoft. Multi-month support lines. Keep an eye on banks. Maybe not all banks, but at least Wells Fargo's of the world and JP Morgan. They're sitting in the multi-month support. If they break down, then that would be an argument that this sell-off is going to start a little bit earlier. I'm not in the scam, but bears have a good argument. So you just need to be data-driven and keep an eye on these levels. All right. Thank you very much. Happy holidays, and I will see you guys on. Well, no. We do have. Hold on a second. We do have yellow tunnels. So if you guys, I apologize, I'm cutting it short, but we do have. Webinar on yellow tunnels. So let's continue this discussion. Let's talk about trading psychology, what's important, how to build trading plan, look at support resistance, which strategies work the best. So please join me at 12 p.m. Central today on the Yellow Tunnel platform. Just click this, register here, or click this link, and I will see you guys at noon if you have time. Thank you very much, and happy holidays. Happy Easter, Marvin. Chag Sameach, Faust. Happy Easter, Claude. Thank you, guys. Happy holidays. Thank you.